Welcome everyone, I'm Lachlan, I'm one of the sales traders here. This video is going to be a technical trader's outlook where I discuss some current trends in the market, what they mean and how to trade them. Let's get stuck into the charts. So first up, I want to cover the S&P 500 as the performance of this is going to dictate the performance of almost every other asset in the market. As you can see, we've been in a ripping bull market the past couple of months, but it's actually now started to break down and it looks like it may be heading lower for the future. Now, one thing I wanted to point out, I've got the volatility index or the VIX down below on the chart. And the reason why I'm looking at this, if you look at the past correction that we had, I remember when this happened about late August last year, a lot of people talking about a crash and that we're going to be heading into a bear market. And then slowly after, started to reverse and now we're into a bull market. I like to look at the VIX because it's going to tell me the overall volatility of the market. If you're going to see an actual recession, an actual crash like we last saw maybe November 2021 or even COVID, you're going to see volatility massively increase because there's going to be a lot of panic and fear in the market. As you can see with the VIX down below, it's moved less than what we saw late August last year. This overall pullback, I would say, is most likely a regular corrective pullback. Obviously, things can't go straight up or straight down forever. Obviously, they have to pull back at some point. And what I'm using the VIX for to say, okay, how severe is this pullback? How much volatility is involved? Is there much panic or fear in the market? That's what I'm watching it for so far. Now, it's broken through the moving averages. It's pulled back to it now. From here, I guess I would expect it to maybe break down a bit lower, but eventually find some sort of a base, maybe around the 4,600 level. Now, while we're talking about the S&P 500, I want to talk about something called market breadth and how it relates to the pullback that we've currently seen. Now, market breadth, for those of you who don't know, simply tells you how many stocks are going up versus how many stocks are going down. Effectively, market breadth is going to tell you how many stocks are participating in the move. Market breadth will tell you immediately the strength and direction of the move in the market. So while the market's heading upwards, like we saw in the past couple of months, you want to see a lot more stocks participating to the upside than the downside. And that's exactly what we started to see. But eventually all trends obviously come to an end. And what you'll start to see is whenever you have a down day in the market, you'll see a lot more stocks participating to the downside than the upside. And while all this is happening, the overall market is still trading at all-time highs. What this suggests is that maybe the market has reached its peak, and that if stocks were to pull back, there's not going to be a broader market to support it, so they may pull back a lot further and then therefore head into a bit of a downtrend, which is what I think we're starting to see now. So market breadth, I've got it up on the chart now, and as you can see from the market breadth indicator below, more stocks are starting to participate to the downside than to the upside. For the first time this year, we can see that more stocks are in a downtrend than an uptrend, and this particular indicator looks at 6,156 stocks. Typically, in market conditions like this, there is less support for stocks that break out of consolidations or stocks that pull back to their moving averages, therefore making market conditions unfavorable for long positions. So I've got Microsoft on the chart now. The reason why I want to show this is it's the largest holding in the S&P 500 currently. We can see a very nice inverse head and shoulders pattern down below. And from there, it reversed and started to head into an uptrend. And now it's trading in between this linear regression channel. Previously failed to make an all-time high and started heading lower. If it starts to break out of this channel and starts to head lower, well, then it's not going to look very good for the overall market, as it's going to start to drag them even lower. And like I mentioned before with market breadth, if most of the broader market is actually now starting to head into a downtrend, well, there's not going to be much support from Microsoft when it does pull back, which is looking like it will do. So it's very important to watch this. This is Microsoft on the chart now. Next up, I've got Google on the chart now. So it looks very similar to Microsoft. You've got the inverse head and shoulders, breakout, and then heading into an uptrend. But what I want to point about this is recently they had a very good earnings announcement, which surprised the market, and now it's extended very well out of that linear regression channel now, and it's probably likely it's going to pull back to those moving averages now. That combined with an overall, I guess, negative market, it may even head lower from that point. And obviously, being a trader, you have the benefit of being able to play both sides. So one to be watching in the future as well. Next up, I have the US dollar index on the chart. For those of you Forex traders, obviously this is very important to be watching. We actually have non-farm payrolls coming up this Friday, and at the same time, you can see the US dollar is making a series of higher highs and higher lows. And we're steadily approaching a key resistance level as well. Now, the theme is for non-farm payrolls lately is actually to be, beat estimates and surprise the market. So you may actually see quite a, wild move this Friday night. That key resistance level there on the chart is definitely something that you want to be watching if you are planning on be trading anything denominated in the US dollars. Which leads me next to the euro against the US dollar. You can see here it's been trading sideways for the past year or two, and it's finally actually broken out of that. You can see I've got the weekly chart on the screen now. It's broken through that quite heavily, and it's pulling back here, but on very tight, narrow candles. Not suggesting a lot of buying coming in for this particular asset, which is always hard to tell when you're looking at foreign exchange pairs because they are an over-the-counter product as opposed to a stock going through one centralized exchange. But I can imagine there being quite a lot of volatility and traders coming in maybe on this move on Friday evening when non-farm payroll come out, particularly if the US dollar is strength. It would coincide with the trend that we're seeing on the Euro USD right now. Next up, I've got the pound against the US dollar. So you can see originally it was making higher lows and higher highs, but it actually broke that trend right here. And it even tried to make a new high, but it failed, and now it's heading lower. This isn't a good sign for the asset, and it does suggest that it may head lower. And obviously this would coincide with what I mentioned before. We're seeing a strong US dollar, usually when the stock market goes down as well, which is what market breadth is suggesting. People flee to a safe haven asset, US dollars being one of them. So all this is kind of correlating. Obviously, the market can go both ways, but it is very important if you're going to be a trend trader to be aware of, okay, where is money going? How does all this relate to each other? And how do I want to trade it? And that's really the goal and the theme of this video. Next up is the Canadian dollar against the Swiss franc. So it broke out of an inverse head and shoulders pattern, started an uptrend, actually faded a previous supply area, which is typically suggests that it may want to head higher, but it's actually now just trading between this range. I mean, it wasn't even able to break a new high. So what I would be watching for is for it to, go sideways for a little bit longer and then form maybe a tight pivot point around resistance and then some sort of a breakout. That would obviously coincide with the carry trade as well, as the Canadian dollar has a much higher interest rate than the counterparts over in Switzerland, which would obviously coincide with the trend of this asset as well. All right, next up I've got dollar CAD on the chart. You can see it's been going sideways for several years now, but now it's actually starting to make higher highs and a series of higher lows as well. And it looks like it's actually starting to form a nice tight pivot point around resistance as well. A breakout of this would be a very strong sign, signaling that it may actually head higher going forward as well. Next up, I've got gold, which has had a very good run the past couple of months, but as I've discussed, it can't go straight up forever. We're on the 2-hour chart. You can see it formed a head and shoulders top, bearish divergence on the awesome oscillator down below, and it's broken down from that and headed to the previous support area. Now I've actually got the volume on the chart as well. You can see where most of the volume or most of the liquidity is down at that 2165 level. Should gold continue to go lower, it's very likely it's going to find support down there. So definitely be watching this going forward if you are trading gold. And lastly, I want to finish on some Australian stocks. So I've got SMR on the chart now, Stanmore Resources. You can see it's been in a linear regression channel or an uptrend the past year or two. Very strong earnings the past couple of years as well. You can see it's forming an inverse head and shoulders bottom as well, which is typically seen at the bottom of a trend and then the start of a new trend. Now, why I want to talk about this particular sector. Now, the reason why I want to discuss this is we've recently seen a very strong uptrend, particularly for speculative stocks, so tech companies, semiconductor companies, and so on. Now, usually when this happens, people, have less of an interest in the traditional value stocks, so stocks that produce dividends and are growing their income consistently as well. But typically when you see people start to sell out of these speculative stocks, money never leaves the market, it just goes into a different asset class. And typically sometimes you may see money go back into some of these value stocks. SMR, if you were to actually follow this trend, so the peak and the lows of it, it does actually inversely correlate with the NASDAQ or the S&P 500 as well. So That's why I wanted to bring it to your attention. As you start to see the overall, I guess, NASDAQ and S&P 500 sell off, you may see some money that would normally go to speculative stocks go to some value stocks as well. And there's many of them, but I wanted to point out this one, considering that it is showing an inverse head and shoulders as well at the low. And lastly, I want to talk about Red 5. So this is a gold stock on the ASX. If you have a look at it, okay, so all the markets have pulled back, gold's even pulled back, but this particular stock, it's holding above its 21-day moving average. So what this potentially suggests is right now it's being suppressed. The market is overall going down. There'd be a lot of selling pressure coming in for this particular stock, but it's still managing to hold up quite well. And what this suggests is, okay, let's say gold starts to head upward again and the stock market starts to head upward again. Now there's not going to be, I guess, any suppressants coming onto this particular stock. What will it do then? Will it take off, or maybe it will just continue to go sideways because no one really is paying too much attention to it? Something to take note of course. It's in obviously a sector that's doing well the past 12 months. I'll be watching it, and that 21-day moving average level is going to be key. All right, that's it for this week. If there's any assets you want me to cover, comment down below. I'll address them in next week's video. If not, I'll see you all next week. Thanks for watching.